Have you been looking into mining using hardware? Are you a bit confused about the prices and how mining actually works? Well, you and me both. Let's get into the profitability of mining with Bitcoin and how the profitability is affected by the network difficulty and the Bitcoin price. Stay tuned. Hi guys, my name is Alan. Welcome to another crypto video. On this channel we like to discuss cryptocurrency, the concepts behind it, and try to make things really simple to understand for the average person. Remember, I'm not a financial advisor, so all the opinions that I share on this channel are my personal opinions only. Don't take my word for anything, do your own research, but let's get into the video. So we're going to look at whether or not mining is actually worthwhile or not. We're going to do a few calculations and get a real feel for how this difficulty stuff works. In my previous video, I covered all the basics of Bitcoin mining, explained how the whole process works. So if you haven't watched that video yet, I strongly recommend that you do. Otherwise, you might not have a clue what I'm talking about in this video. So click on this card over here to go watch that video. I'll be here waiting for you. Okay, welcome back. Let's get on with it. So given the amazing performance of miners like the Antminer S9, let's have a look at its profitability and if it's worthwhile or not. So using the information I have over here, we can calculate how much profit the miner would make us per day, and given that profit, how many days it would take to make the same amount of money that the hardware cost. So that's basically, once you reach that point, then you're safe. You've paid off your hardware, and after that you're just making pure profit. So when you're looking at buying a hardware mining equipment, this is basically the most important thing to look at initially. So with the Antminer S9, you're going to pay about $1,010 excluding shipping. At the moment, it's actually come down quite a bit. It used to be about $2,000 a couple months ago. The S9's mining hash rate is 14 terahashes per second, which is extremely high for one device. But it does come at a cost. It uses quite a lot of power, 1,320 watts of power. The cost of electricity is the average price of electricity per unit or per kilowatt hour in South Africa, but I think it's pretty similar for the rest of the world too. The profit you'll make per day is $3.58 after the cost of the electricity that it uses, and then so given that, the days to break even would be 282 days. So that's quite a long time. That's over 9 months to break, just to make the money back that you invested in the hardware. But in theory, once your hardware is paid off, you're going to be earning about $111 per month profit. So let's look at the average GPU mining rig. The hardware costs here are going to be a little bit higher than the ASIC miner at $2,020. It's going to mine at a hash rate of 100 mega hashes per second. That seems very low, but because a GPU rig normally mines Ethereum, based on the network difficulty of Ethereum currently, 100 mega hashes per second is pretty good. It's pretty fast. So the power consumption there is again lower than the Antminer S9. Cost of electricity stays the same. The profit per day is very similar actually to the S9, but the amount of time to break even is quite a bit higher than the S9, almost double the amount of time due to the higher hardware costs. But with both of these examples, once the hardware is paid off, in theory you're going to make around $111 per month, which doesn't sound bad. It sounds pretty alright for not doing anything. The hardware just sits there working all by itself. But there is a catch, unfortunately. Each of these examples were done, or these calculations were done based on the current difficulty levels and the current Bitcoin and Ethereum prices. Each week the difficulty goes up as more and more miners join the network and start mining. Let's look at the difficulty of Bitcoin over the last few months. As you can see here, the difficulty of Bitcoin has gone up over 300% since December 2017. If we have a look at the price of Bitcoin over the same period, you'll see that it has decreased by about 200%. Let's take a look at the same profitability calculation if we did it back in 2017. So we're going to use the Antminer S9 as an example again, because the S9 was extremely hot property in December 2017. It was the most popular, by far the most popular miner that people were buying. And because it was in such high demand, the factory charged crazy prices for the miner. I think it was even more than $2,000 back then. But yeah, the hash rate was the same, the power consumption was the same, the cost of electricity was still pretty much the same back then. But look at the profit. The profit per day is $43.74. That's almost 10 times more than if we do the same calculation today. But if you look at this picture, it looks like a much more enticing investment opportunity than the one, than if we do one today. If you look at the days to break even, it's only 45 days. That means in a month and a half from doing this calculation, or from buying your hardware and starting to mine, once the hardware is paid off, you'd be earning $1,312 every single month. I mean, that's crazy. That's huge amounts of money for a relatively small investment. So if you compare the prospect of mining back in December 2017 to what it looks like today, back then it looked like you would be able to make $1,300 of profit per month, as opposed to today's $111 per month. That's quite a vast difference in a span of not even 6 months. So why has it changed so much over such a short period of time? So let's take a look at how difficulty works, and you'll see why it's been increasing so much. Bitcoin's algorithm has been designed in such a way that it has to control two things. Two things are fixed and cannot change. The first thing is that there can only ever be 21 million Bitcoins discovered. And secondly, every 2 years, the reward given to miners that discover a new block needs to be halved. A third factor that the network doesn't have direct control over is the amount of people or miners who join the mining network. If you take all the miners on the network and you add up all their individual hashing power, you'll collectively get the network's total hashing rate. So the more miners who join the party, the higher the total network hashing rate will become. So as I mentioned before, this number cannot be controlled directly by the network, but if this isn't somehow managed, the first two factors that I mentioned won't be adhered to. So what the network does to manage this third factor is they increase or decrease the network difficulty accordingly. So if the total network hashing rate goes up, Bitcoins will be found at a higher rate, and then the difficulty will go up to control that rate. If the hashing power decreases, the Bitcoins will be found at a slower rate, and then the network will accordingly adjust the difficulty down, so that the rate is constantly controlled to meet those two factors of only ever finding 21 million Bitcoin and halving the miner's block reward every 2 years. So now it becomes more clear that when the difficulty was still much lower in December 2017, the profitability of super powerful ASIC miners like the S9 was so high that as people realized that there's such a lot of money to be made, thousands of people were ordering and starting to run Antminer S9s. And in doing so, the network got flooded with miners, and the difficulty went up at a much higher rate, or a much faster rate than it had been before. Large mining farms were built where a single entity would have hundreds or thousands of super powerful ASIC miners with huge amounts of hashing power. This absolutely flooded the network with hashing power. So fast forward a few months and the network difficulty rate has tripled. And tie this to the fact that the Bitcoin price has halved in the last couple of months. Doing the same calculation now, buying a device like the Antminer S9 just doesn't look like a good investment anymore. Now one can look at this issue in another way. If you simply look at the amount of Bitcoin that you will be earning through your mining hardware, and you don't convert that amount into rands or dollars, the current Bitcoin price doesn't really affect the profitability. If you're like me and you believe that the Bitcoin price is going to return to the high levels that it had a few months ago, or perhaps even higher than that in the future, it doesn't really matter what the price is right now. If you do the same calculations based on a presumed future value of Bitcoin, which is at a much higher price than it is now, you'll see the profitability is going to look totally different. So let's do another calculation based on a speculative future price of $25,000 of Bitcoin with the current difficulty level. As you can see, this shows based on a possible future price, it would actually only take 55 days to break even with the current difficulty levels, and could see you earning about $550 per day. I guess the important thing here is to be very careful when making a decision whether or not to buy hardware for the purpose of making money through mining. Due to the ever-increasing difficulty and the totally unpredictable nature of cryptocurrency, mining is a highly speculative investment and could seriously end in tears. I remember back in 2017 when the profitability looked so fantastic, the Antminer S9s, for example, were in such high demand that the factory couldn't keep up with orders. People were buying second-hand S9s from people off eBay for up to 3 or 4 times their normal price that you pay at the factory, which was already pretty high. Those people will likely never make enough money to cover their hardware costs. So my advice on hardware mining would be to do good research on profitability and to be aware that the situation can change quite rapidly before you've even made your money back on your hardware costs. Mining is an integral part of sustaining the network and facilitating transactions over the network, so I hope people continue mining even though profitability doesn't look all that great. I hope you guys are more mining savvy now and can make more informed decisions on mining before you spend your hard-earned money on hardware. I've left a link in the description to the site that I use to do my mining calculations in case you want to play around with that. This site is pretty handy because it also has different charts for network difficulty and network hash rate. Let me know in the comments what your thoughts are on mining difficulty. Do you think that the network difficulty is going to go down in future, making profitability good again, or do you think it's just going to continue rising as it is now? That's it for this video, guys. If you enjoyed the video or if you learned something, please hit the like button and consider subscribing to my channel. I'll see you guys in the next video. Consider subscribing.